Welcome back, students who are taking financial accounting, and in this series of videos we are working on um, the theory videos for Chapter 8, Long-Term and Other Assets. And this will be the last video for this series on the theory aspect, and this has to deal with the focus on decision making. Excuse me. Um, in this chapter for the focus on decision making, um, the two ratios are the return on assets and fixed asset turnover, because this chapter deals with assets. And remember that these are not new ratios for you. If you had math for business and finance or math applications, these were covered in that subject. All right, so this is kind of a repetitive thing here, um, and so I'm not going to spend too much time on these. Go back and watch the videos in the math for business / application section of uh, the student community if you want additional information on uh, these ratios. The return on assets is your net income. And remember, your net income is your revenues less your expenses, which gives you your profit or loss. That's your net income, right? And it says your average total assets. Okay, so your average total assets being, all right, we know we're dealing with total assets, okay, but the key word is average. All right, what is average? And this was covered in the previous chapter. um, Watch the focus on decision making there, um, about how to think about these here ratios. I mean, everyone tries to memorize, but you don't memorize, you understand the concepts. Average is the beginning plus the ending, and you divide it by 2. That gives you your average. Okay, so if I'm talking about average total assets, I have my beginning total assets, and if I use the example in the book, which was like 500K, and my ending, which was 700K, okay, my average between the two, that's 1200, well, 1200K, or 1,000,002, and I divide that by 2, so it ends up being 600K is my average. And I divide that into whatever my net income was. And that's it for the return on assets. Right? The book shows 60,000 as my net income. So if I have 60,000 and I divide it by 600,000, I end up with 10% as my return on assets. Okay, it's just basically that simple. The important thing being here is that you understand, what your net income is, and that you understand what your average total asset is. Average being beginning plus ending divided by 2. Okay. Fixed asset turnover, um, sales divided by your average fixed assets. Same thing. You're looking at your sales, and that sales is a net sales. Okay. Um, if you have sales of say 100,000 and you have returns and allowances of say 3,000 and discounts of 2,000, your net sales is 95,000. Okay, so that's what you're using for your sales. Even though, and again, it all depends upon how the data and the information is presented to you. Okay, if all they're going to do is just say your sales are 95,000, then great, that's what you're going to use. But if they give you my sales are 100,000, my discounts, blah blah blah, are 3,000 and 2,000, well then you're going to have to figure out that your net sales are 95,000. You don't use the 100,000. Okay, excuse me, because that's not correct. All right, use the concepts and the information. Right, and again, it's the sales over average. So whatever your fixed assets are, it's your beginning fixed assets plus your ending divided by 2, whatever that comes out to be. And the book uses 200,000 plus 300,000. Divide that by 2, so that's 500,000. divided by 2, or 250,000 as my average fixed assets. And since they're using 500,000 as the sales, and my average fixed assets are 250,000, my turnover is 2.0. Right? The math is the math. All right. It makes no sense to, I'm just doing the math here. But, realize what these terms mean. Okay. And if you understand those concepts, all right, then it's, the math that's how you find the right numbers. A lot of students miss, or they can't get it because they don't understand the concept. They can do the math, but they just don't think deeply enough about what these words mean and what the concepts represent. They want to just look and be able to pick and choose like it's given to them very easy. Like they're being told exactly what the net income is, and they're told exactly what the average total asset is. That's not how information gets to you in the real world. Okay. Um, you know, I don't have to cover the income statement in order to know, that there's just a multitude of ways that you can come up with a net income. All right. And of course, you're not going to be given if you're looking at a balance sheet, or you're looking at a trial balance, for one period to the next. Let's say you have November, and then you have a December trial balance. Right? That information on those trial balances don't look anything like what one number. Okay, but from that information on that trial balance, you should be able to figure out what your total assets are, and you should be able to figure out the average from them. Okay, even though it doesn't resemble anything like what you're supposed to have. And that's what I'm trying to point out again in this video on focus on decision making, which is exactly what I did in the last one, the chapter before, the chapter before, and the chapter before. I can't stress it enough. You can't just immediately think that you're going to be given the information as cookie cutter, as a given. No, financial accounting is about thinking, okay, and understanding and applying it to the situation. Right? If you want to just be given, given information, then go study history or music appreciation or something like that. Okay, you're not going to do well in financial accounting. All right. So with that said, if you have any questions, go ahead and watch the videos again. Go back to your math for business and finance. Watch the videos that are on the student community, because these ratios are covered in that. It's like chapter 20, 21, something like that. One of the ending chapters, okay, where they covered all the ratios all in one chapter. Here in this textbook, they're giving you each ratio, the ratios that are important for the topic that's being covered as a focus on decision making, right? And of course, even though you have like in this case here, you were told that your return on assets is 10% and your fixed asset ratio turnover is 2, right? Those numbers don't mean anything by themselves in isolation. You need something to compare them with in order to determine whether that's a good number or a bad number, whether that's going up or going down. Obviously, if my return on assets is a positive number, that's a good thing because it's positive. I'm getting a gain and I'm happy with that. But let's say I'm supposed to have 25% and I only have 10. That's not such a good thing. And that's why you need to use the number in comparison. Okay. All right, so that's it. We're done with the theory videos for Chapter 8. And if you don't understand something, watch them again. And if you still don't get it, feel free to contact an instructor. And we'll see you in the short exercises for this chapter, and we'll start doing those problems.